Welcome to Go Lofty Academy, your strategy shortcut. I'm Jasper, and today we're diving deep into one of the most powerful tools for any business, the financial model. Let me start with this. A vision without numbers is just a dream. Whether you're a startup preparing to raise capital or a mature organization planning your next phase of growth, having a financial model is not just helpful, it's essential. In this episode, we'll show you why, what to include, and how to build a financial model that reflects your business strategy and fuels your decision-making. Stick with me to the end. I'll also walk you through a real example using the financial model to show how strategy and numbers come together. And hey, if you find this valuable, please hit subscribe, like, and share this with your team. Let's get started. Here's the problem. Most early-stage startups, and even some established companies, either don't have a financial model at all, or they're using one that's totally disconnected from their actual business plan. What happens next? Misguided growth targets, investor skepticism, burned cash, poor hiring choices, and missed product market fit. Think of your financial model as the navigation system for your business. Without it, you're driving blindfolded. With it, you're making data-informed decisions about revenue, hiring, customer acquisition, and profitability. Let's be real. When you pitch to investors or present to a board, your strategy has to translate into numbers. They don't invest in ideas. They invest in proven assumptions and financial discipline. So how do we solve this? Let's build it the right way, starting from your strategy and scaling it into your numbers. A financial model that supports your strategy must include these core components. Revenue model. How do you make money? Operating model. How does the business function? Customer acquisition. How do you grow? Team and hiring plan. Who do you need? Expenses and Capex. What does it cost? Valuation and metrics. What's your trajectory? Each of these isn't just about math. They represent strategic decisions. Your pricing strategy, your go-to-market motion, your product roadmap, they all show up here. Now, let's open up the model we've got and walk through the parts one by one. Let's start with revenue. In this model, revenue is split across multiple streams, reflecting a SaaS platform with modular product lines. You'll see assumptions around monthly recurring revenue, MRR, annual contract value, ACV, churn rate, new logos, and upsells. There's a clear logic for calculating revenue by month and year, grounded in metrics like active customers, average contract size, growth assumptions. This aligns with a sales-led growth model, and you could easily tweak this for a product-led or hybrid model. Tip: if your model doesn't clearly show how your strategic goals turn into revenue, go back and rethink the logic. Next is the operating model. Here you see the cost structure, customer success, engineering, product and R&D, G&A, general and admin, marketing and sales. Each department has headcount assumptions and cost per role. This is tightly linked with the hiring plan sheet, which we'll get to next. You also see fixed costs, office, tools, software licenses, and variable costs tied to growth. These expenses should scale strategically. For example, are you investing in sales before revenue shows up, or engineering before launching a new module? Tip: use this section to reflect your business priorities. Your costs should follow your strategy, not just fill cells. Your team drives everything, and the hiring plan is your HR strategy in spreadsheet form. In this example, roles are forecasted per month, per department. SDRs and AEs ramp up as pipeline grows. Engineers join ahead of feature launches. Customer support scales with users. You'll see salary assumptions, ramp-up time, and benefits calculated. Tip: be realistic. Overhiring too early burns cash. Hiring too late stalls growth. Use metrics to justify each role. Now for the big question, how much is your company worth? The Valuation tab uses the DCF method and VC method. You input revenue projections, growth rates, discount factors, and exit multiples. It also helps you calculate runway and burn rate, how much to raise, and when equity dilution. Tip: this is where your financial story meets your funding story. If you're raising capital, you need this sheet dialed in, clean, logical, and defendable. Let me give you some rapid-fire best practices. Start with strategy, then build the numbers. Link all tabs with formulas. Avoid hard-coded values. Forecast monthly for the first 2 years, then annually build 2 to 3 scenarios. Base, aggressive, conservative. Keep a separate tab for key assumptions. Make it investor-friendly, clean visuals, clear drivers. And above all, review and update it monthly. This isn't a one-time doc. It's a living, breathing dashboard for your business. All right, let's take a quick walkthrough of this comprehensive startup financial model, your ultimate strategy to numbers bridge. This model is designed to give founders, leaders, and investors a crystal clear view of how your business model scales over time. Let's start right here with the main dashboard. This is your control panel. It shows your key financial KPIs, revenue, EBITDA, cash flow, KC, runway, all in one view. This is where you quickly validate if your strategy is financially sustainable. Now the metrics tab. This is where we track unit economics, LTV, CAC, payback period, and conversion funnel efficiency. This helps you understand how scalable your go-to-market engine really is. Next, we dive into the model settings tab. Think of this as the brain behind the spreadsheet. It's where you set assumptions like the starting month, customer types, growth rate presets, and churn behavior. Changing values here will ripple through your entire model. Let's shift to valuation. This tab helps you test valuation scenarios based on projected EBITDA or revenue multiples. Super helpful for setting your funding strategy or equity dilution targets. Now onto the engine, operating model. This is where everything comes together. Revenue, cost of goods sold, OPEX, and resulting margins are calculated dynamically. If you're managing a startup or mature organization, this tab will tell you if you're truly building a business, not just a product. Customer acquisition tab lets you plug in your channel strategy, organic, paid, outbound, partner, and understand CAC by segment. This is the heart of your financial model. It maps out how your business actually earns money. The revenue tab breaks down your income streams, typically by product line, pricing tier, or customer segment. You'll define assumptions like customer acquisition rates, conversion funnels, churn, and pricing models, monthly or annual. For SaaS businesses, this is where monthly recurring revenue, MRR, and annual recurring revenue, ARR, are tracked and forecasted. This tab gives you a forward-looking view of your top-line growth and is directly tied to your GTM strategy and customer lifecycle. The hiring plan tab maps your team growth across departments. Want to scale engineering or sales? This is where it starts. Operating expenses, OPEX, tab. This tab outlines your recurring costs that are not directly tied to product delivery, like salaries, office rent, software subscriptions, legal fees, and travel. These are the backbone of your operations and typically grouped into functions like R&D, marketing, sales, and G&A. Understanding OPEX helps you calculate your operating margin, manage burn rate, and track how efficiently you're scaling your team and infrastructure. Capex and D&A, capital expenditures and depreciation and amortization, tab. Here, you account for long-term investments, servers, equipment, office renovations, or technology infrastructure. These aren't expensed all at once, but depreciated over time. This tab helps reflect how your capital investments are spread across months or years. Depreciation and amortization smooth out the cost over time, making your model more GAAP compliant and giving a truer picture of profitability. Deferred revenue tab. This one's crucial for subscription-based businesses. Deferred revenue represents cash you've collected up front, say for an annual SaaS contract, but haven't earned yet. This tab schedules how that revenue is gradually recognized month by month. It ensures your revenue model aligns with accounting principles and gives you an accurate cash versus revenue picture for planning and reporting. So there you have it, a real-world breakdown of how your financial model reflects your strategy. Whether you're a startup founder looking to raise a pre-seed round or a CEO of a growing scale-up managing burn and runway, this model is your business's truth serum. If you want access to this model template, we'll soon release a Go Lofty financial toolkit, pre-built, plug and play, and aligned to today's best practices. In the meantime, hit that subscribe button, like the video, and share it with a co-founder or CFO who needs this right now. Until next time, stay focused, stay bold, and keep your numbers as sharp as your vision. This is Jasper, signing off from Go Lofty Academy.